All right, so it's April 25th, 2023. We are one day after the FRC earnings, and it has been 2 months since we went and grabbed the money out of the bank and we're documenting everything. Remember, that's when SVB happened. However, the banking fears may be returning. So we had some updates on FRC. We talked about it yesterday. They gave the updates on their earnings. They failed to do an earnings conference call, and we said that was a very bad sign. However, they doubled down on it and they gave an update today. It led to the stock dropping an additional 20% throughout the day, and now the banking fears are returning. It even hit some of the bigger banks. So I'm going to give you that breakdown because it parallels SVB like very, very well. It is almost dramatic, but now we got to see how the earnings play out, because after the bell, Microsoft and Google, they beat a very low bar. That's been the first kind of big tech that's actually doing very good now. So we'll see how it plays out. And now maybe tech can return as the safe haven, but we have to watch what happens with FRC. But thankfully, it may be contained to just FRC alone, because even Wall after hours, theirs wasn't that bad, but they're kind of popping and dropping all over the place. However, we got to see, does this lead to more contagion? And then we have Powell right around the corner. But let me give you the quick breakdown. We talked about it yesterday. FRC, they didn't give an earnings presentation. They did not answer any questions. That was the first big sign, but simply their deposits fell much more than expected, and they said they're going to be pursuing strategic options. That's where they announced they're firing people. And then even today, one of those strategic options, that was the big piece of news that sent them tumbling. The strategic option that they announced was that they want to sell $100 billion of assets that they own to pay back some of those Fed loans. Like they updated yesterday, they have $104 billion of customer deposits, but then $105 billion of Fed home loans, and that's going to weigh on their funding and all of that. So they announced today, still no updates, no comments from the CEO. They said they want to sell $100 billion of their mortgages and other bonds that they have that are below value now, which means they're at a loss, but they want to generate $100 billion to pay back some of those loans. So the stock was down 30%, but when they announced this, it dropped an additional 20%. So why is that important? Well, there's good and bad to all of this, but this is where the whole SVB situation comes into play, because this is exactly what SVB did. The news that brought down SVB, remember, we made this video right at the start. We were talking about the press release, what the CEO said. I mean, if anything, SVB had way better communication from the CEO and management on it, but the news that brought down SVB, they came out that one morning and they said, hey, we're looking to sell our shares to raise capital, issue more shares to raise capital, and that we are going to be selling some of our for sale assets. We're going to be selling them at a loss to get some capital to operate. Now, right when people heard that, the stock dropped, and then throughout the day, it kept pummeling or getting pummeled. And then the next day, or by the end of that day, Peter Thiel was like, get your money out. And then the next day, regulators were at the door and everybody was withdrawing money from SVB. And then the whole fiasco started. That's what happened with SVB. So what happened today with FRC? We had that earnings yesterday. Deposits fell more than expected, like we talked about, and then they didn't give any updates. The stock was down. It was not down that much. And then they came out with this update saying, we want to sell our assets at a loss to generate capital. The only difference between them and SVB, they did not sell more shares. So here's the interesting part now about why it's good and bad, but mainly bad that they're doing it. But the good and bad about them saying we want to sell these assets, the bad part or the good part is that, one, it's going to give them capital, so then they could operate, pay down the high interest loans from the Fed, and then they could maneuver and hopefully start to make money again without interest eating them alive. That's the good part. The bad part is that it forces them to take a gigantic loss on, that was good money. They paid a lot of money for these assets at one point. They're going to take a big loss on it. They could have played this held to maturity game and had it not affect them. And that's why they have such a high book value per share. So if they do realize these assets at a loss, it will kill their book value. They'll take an immediate loss, but they'll have some cash to operate. And that's why it's good. But the problem is, why this isn't good, and the real big reason and why traders reacted how they did is this is what happened with SVB. And if you're willing to take gigantic losses to operate, I mean, it's pretty much saying you're in a dire situation where you're willing to take a big enough loss to get some cash right now because that's what you need. Otherwise, everything else and what they got going right now, it is clearly unsustainable. So this is what happened today. The bank stocks started to get affected as FRC started to go down more. And like we said yesterday, the worst is over for now, but depending on what happens, people might start to freak out again. And what we see, the short term, things are chill, but mid to long term, that's where it starts to get a little bit stickier. Now, with this coming back, if it affects the bank stocks, we're going to start to watch that balance. The only good thing we have going on right now is now these earnings. We'll see tomorrow with Meta, and we've already got a couple here again, Google and Microsoft. But if those are actually going to end up good, that may help people ignore it and say, well, that's all contained to the financial sector. They're going to buy the winners of the banks, sell off the regionals, and then put all that money into tech. So that's what we're going to see. But for now, in the last 2 months now, since we've documented all of this, I mean, the fear is actually coming back a little bit today, or at least what we've seen in the last month. And even bond volatility is kind of climbing back up, and the yields are now at some of these lower levels. So we're going to see. I hope you enjoy this update. Definitely watch FRC. You can watch Wall. And now for everything else and what we're getting into, we did have some economic data today. Most of it was contractionary, but the real estate data was good. But really in the morning, what we were responding to, there was really bad earnings out of UPS. They dropped 10%. All the other earnings were good. But again, if you did good, you got rewarded, but not as much. I mean, there was a big winner with Spotify. They killed it for tech. And again, that's more good news for tech. And if you're looking for any safe haven there, at least for the next couple of months or until we get Powell, but that's what kind of kicked it off. But then there was more bad news in China in the morning. And then we dropped on the China news. Again, it was like their worst week in a month. Today for the S&P, it was the worst day in a month, but China's had the worst week. Their streak has not been good. And then even in Europe, they started to go down. UBS, another bank, this is where the bank fears come in. They also brought back some of those bank fears as well. So that's all what kind of culminated here today, led to this S show. And now we got to write out the earnings. Microsoft, they should help. Again, that AI news is lifting them up on the conference call. Azure on constant currency, still growing. I don't think they've changed any of that guidance for now. So as long as it's up there, things will be good. Google is kind of in the middle. They're pretty much break even from where they started, but they did sell off throughout the day. And then Meta tomorrow, that's going to be a very big one. And then there's going to be Roku and like ServiceNow, after hours, even Teladoc, and those could be big. URI, that could tell you a little bit about the economy. But in the morning, Hilton and Boeing, I'd watch out for those two. Boeing, just in general, everybody watches out from. There's a lot even expected. But now Hilton, travel and travel demand, watch all the travel sympathies. And even I think it was Google, they said in their earnings, advertising was driven mainly by travel. So we'll see how that factors in. But really, waiting on earnings mode. We're finally getting a couple of bad days. The question is, does all that negativity around banks and how it played out today, does that outweigh decent earnings on a low bar for Microsoft and Google, and then the anticipation for next week? But so far, not too many earnings have been bad, except for like AT&T and UPS and a couple here and there. Oh, and Enphase got clapped too, but we're going to see how it plays out. Otherwise, I mean, you're either playing on the earnings. I made a couple plays. I lost $300 on Microsoft today. We made money on it the day before. I was going for the earnings flip. I got squashed on Netflix, Tesla, even my old Enphase from last quarter. They got clobbered. I sold PNC for like a $30 gain today. Was not able to get the $400 in gains we had a couple days ago. Didn't want to get drawn into any of the drama there with any of the tech stocks. So we'll see how it plays out. But overall, the earnings plays have not been good. Even Netflix, they're still down. So still riding out a lot of those, but I'm going to to be playing Amazon, maybe Microsoft. I'm watching the earnings call now, contemplating it, but realistically now, you're either going to finalize your earnings for this week, play Amazon and Apple next quarter, and then it's Jerome Powell, and hopefully we're able to go from there and play the bonds and everything else. And I'm still short the 10-year, and that one went negative today, which was crazy, but we're going to see. I will see you on stream. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, no such thing as too bad to get better. That is an offensive thought. So let's go, baby. You can always improve, and the message is have no fear. Even if you don't know what to do, don't be afraid, because that's still doing something. I hope they feel me, Chad. It's gonna get wild. The markets, I'm watching. You guys, do you see this? I recorded in front of a screen today instead of recording in front of like a table. You know what I'm saying? I try to change the scenery, but there were so many earnings. Again, you see all the earnings, and Chipotle killed it, and Visa killed it, and Phase did awful. Oh man, it was wild. Okay, see, this ain't awkward. I'm ending it informationally again. Okay, bye.